What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Monday, September 27th. And as always, guys, I appreciate your guys' viewership and anyone that tunes into the channel. Any likes and subscriptions or comments are always 100% appreciated. As always, the point of the channel is to get some more growth going. So with that in mind, let's get into it. As you guys see from the screen, this is my Thinkorswim. As you see, SWN Energy Company, right? So, little side story. This morning, I was waking up, driving into work. It was essentially like 4:30 in the morning, and I was listening to the Squawk or the Street, one of the two. And I remembered hearing they were talking about essentially a gas shortage out of Europe, and I remember that stuck in my mind, right? Because again, I had already heard or seen through the flow in Unusual Whales, this ticker XOP. Come through, and I can show you guys XOP real quick. XOP is essentially the S&P oil and gas ETF, and how they were talking about how it had recently spiked, right? This is the full year essentially of the S&P or the SPDR, excuse me, oil and gas ETF. And as you see, they were talking essentially about this spike here on the back, right? And they were talking essentially that it was going to continue spiking because of now this shortage coming out of Europe, where Europe doesn't have enough natural gas to get through a really cold winter, essentially, right? There's a shortage, right? Specifically for Europe, not applicable here in the US. But that's what caught in my mind, right, as I'm going to work. I get to work, and as always, I start looking into my tickers, log into my investment accounts, have them up on one screen, and just monitor them throughout the day. Well, at around midday, I got a trigger alert from Unusual Whales for a ticker, which is the one you were just looking at, SWN. SWN Energy, and it was an alert for a runner alert, right? So we can go pull it up. It was this one right here specifically. As you see, this for October the 1st, 2021, SWN $6 call. You see that I did hard it. This came in essentially around 11 or 12 midday, or 11:14 right here specifically today. As you see, it is a bullish call. Intraday, you see the red alarm. That's telling you it could potentially have a short-term high volatility play, and essentially has the potential to run up. With what had stuck in my mind from this morning, essentially listening that there was a gas shortage, I put two and two together, looked at the chart real quick, set out my resistance and support lines, as you guys can clearly see from this chart, and I was an immediate player. So looking into this chart, let's take a look real quick, right? As you guys see, it's been essentially trading between this 575 and 396 channel, back and forth for pretty much the entirety of the year, after about middle of January, end of January, beginning of February, right? It's been trading in this channel and building, going up, down, essentially, right? If we take a look at it with my other candle filter that I like to use, Hinkiashi, looking at trends, you see that's got this up momentum, going up, peaking essentially in middle of June, and then having a little rundown essentially through the middle of August, and now we're back up on this run up. And then you see this enormous candle today. Look at this gray volume bar here. Essentially today we had traded 44.1 million shares traded just today alone. So it instantly piqued my interest. I started looking at Unusual Whales, one of my favorite tools, and I was an instant buyer, right, for an option play for this week. So let's take a look at it. Looking into this company specifically, they do have a website, as any other company does. You see the research ratings that they have on SWN Energy, pretty much either a reduce or a sell, and then two holds, right? Going into specifically their website, I have that already pulled up. They do have an investors page for those of you guys that are interested. This is a essentially a natural gas play. They are one of the biggest producers. They are out of the Tennessee area, or middle of the United States, right? I looked into their short position, their institutional ownership, right? I wanted to see like if people or major institutions are buying or selling because of this gas shortage in Europe. It sparked my interest just to take a deeper look. As you guys see, 288 million shares have been purchased up recently in quarter two, 181 million sold. But let's take a look at who's holding and who's not, right? Specifically, what piqued my interest, as always, you look for the big players, right? So let's see right here, Renaissance Technologies, right? Which again, you see a 22,000% increase. Essentially, they're holding 4.3 million shares worth $24.5 million. So number one, that to me is a really bullish sign. That is probably one of the best hedge funds out in the market currently. that's been producing ridiculous returns for their clientele. So the fact that they're a player in this makes me even more bullish than I was before. But you see that some other players are actually holding some pretty big positions. 104,000% increase, Metropolitan Life Insurance out in New York. These two, Renaissance and Metropolitan, are both players in AMC. So then after I saw that, I was like, okay, well, this is a legit play. You got some legit players involved. Let's take a look at what the short is looking like, right? What are the shorts doing? And you'd be surprised at who is in here, right? Let's take a look. I'll be happy to show you guys. Look at that. Our favorite, Shitadil, Kenny and his degenerates, as always, are involved in a short position. They actually increased this by 116% to short. And then you got all their degenerate little friends, as always, with all the shorts. You know, they'll pile in and abuse the hell out of a company trying to short it to hell, right? But looks like this time this might go against them as well, now that there is this natural gas shortage. So that was bullish sign number 2. Here is the article essentially talking about the European gas shortage. Essentially that it would drag U.S. gas prices up higher, even than normally expected, because again, their shortage would either involve potentially some American companies making deals with them or shipping to them natural gas, which would only boost all of our companies essentially up higher, right? Because we're the ones holding the majority of the gas. The United States does not have any shortage of natural gas in any way, shape, or form. Going into Lucid Tracking, I did also search for Southwestern Energy. As you see, they are ranked 145 as a short position. Nothing is listed, but from MarketBeat, we can clearly see that essentially there is 43.3 million short shares sold against Southwestern, which you always have to take into account a short position whenever you are looking into a play that you are wanting to get involved in, right? So knowing that, fun fact, knowing the institutional ownership, knowing the ranking on Lucid Tracking, it's not that highly ranked when it comes to short positions. For those of you that are curious to know who's holding the #1 rank, you see Smile Direct Club, which I did make a video of that on Sunday. Go EV, I also made a video on that on Sunday, and now AMC has taken back the #3 ranking on Lucid Tracking. So let's go into Unusual Whales, my favorite tool to use, and let's take a look at the flow to see what the flow is looking like and what made me a buyer specifically for Southwestern Energy. So this is the flow for Southwest Energy. Looking real quick, just from the initial data, you see at the top 1.7 million on call premium today versus 334,000 in put premium. Let's take a looking at the charts. You see most of the pie charts are essentially green, meaning that they are bullish. All right, we'll get this little divide going so it makes it more clearly visible. Again, all the pie charts for the most part are green, with the exception of volume, right? Call to put. So looking at the expiration specifically, you have October 1st, which is bullish. Again, over puts, essentially 2.6 million compared to 2.2 million. Looking at the October 15th, you see we're essentially at 4.5 million. Puts on this expiration, 1.7. Looking at the specific strikes that are being targeted, the alert was for the 6. However, you see that the 5.5 strike has essentially $4.5 million on it compared to puts at 2.8. So that made me extremely bullish. When I did the breakdown, and to get the breakdown specifically by tiers, remember, all you have to do is click on the ticker, and then it breaks you into this page, right? The historical flow page. Now, this may seem a little confusing, but I'll clear it up for you guys. Watch. So we're going to take the price out. First of all, focus on the call volume. This is going back from March of 2021 to current day. Look at this spike here at the end. This massive spike on calls, right? So that was positive sign number 3. Now, let's take a look at the price when you throw the price in there. Look at the price. Essentially, trading high, spiking, reducing like we showed in the chart, and now we have this spike coming into current, right? So that was number 2. Number 3, look at the put volume. Put volume is relatively low, having a really nice little spike here at the end, but nowhere near compared to the calls, right? And now let's do open interest in there. Where is my open interest? Total open interest. As you see, it is climbing as well with the calls now that we are getting closer and closer to that date, right? So if you click on see today's SWN levels, it gives you the levels by premium amount. So first it'll be 1,000, then 5,000, then 15, then 30. So looking at the $1,000, so meaning people that are spending $1,000 or less, you see it's pretty evenly tied for this October 15th strike. And again, being targeted for the $6 strike, it's pretty even at that price point. At 5,000, things change a little bit. You see that the expiration for October 15th and November or January 2022 are peaking. And again, they are targeting the 4, and essentially the 5 and the 6 back here, right? I can actually reduce that. Hopefully that's easier to see. You see the 6 down here, or up here, excuse me. There we go, that's a better zoom. 6. Going into $15,000 premium, you have December 17th, the October 15th, and October 1st, all above the puts. Targeting strike, essentially the $4 and the 3.5. For the 30,000, it's not relatively any money going into that, but again, being that for the majority of the part, all the tiers were essentially bullish, with seeing that this spike now has broken over this point of resistance at 575. Let's take a look at our indicators. Our RSI is sitting essentially at overbought. Our MACD has now converged over into a buying period with this green arrow that we see here. And looking at our average true range, you see that we have a swing potential of 0.31, essentially 31 cents. Now, with this being said, tomorrow, what can you expect? I was a buyer specifically for an options play, which I will show you exactly what I went with. There was the 550. As you see, it was a 0.75 delta, giving you a 75% chance of being profitable on this play, but you're also going to be earning $75 for every $1 Southwestern Energy goes up. With all the bullish signs we saw in the flow and the market beat, I was a player, right? Again, simple play, not costing me that much, essentially $45 to $51. I think I put a bid in for $50 each, and I picked up 3, so that was $150 that I threw down on 3 contracts. If those of you that like to get the breakdown as to what potentially that could earn you, we can go to options calculator, one of my favorite tools, and I'll show you real quick before I end the video of what we are looking at. SWN, get some pricing. I guess I should have done this live, but here we go. Selecting an option, it was for October 1st. As I said, it was for the 50. Essentially, I paid $50 for these, so 50. And I did pick up 3 contracts just to show you guys real quick. And we're gonna go, essentially we're sitting right now at 6, and we'll just play easy double up, right? Let's just say the price were to double. We'll calculate that out and give you a breakdown. So essentially when you use options calculator, what it does is it gives you each price point that the stock could potentially go up. And these green squares, when you click on them, it's giving you your earning potential, right? So for 150 bucks, essentially, if Southwestern Energy this week does shoot up and go to 860, that's $780 you would pocket. If, let's say, it doesn't go that high, let's say it only shoots up to $7 even, you're still going to make $300. Let's say for some odd reason it does double up, you're talking about an $1,800. So you see the range there in potential on a weekly option play, and how you're playing this intelligently, using not only indicators but also using your tools as well as the flow from unusual whales to give you conviction in a play when you do decide to pull the trigger and be a player in these options, right? So again, options can be tricky as long as you know what you're doing. There's nothing wrong with playing options on weeklies, right? You just gotta understand what you're doing and understand what you're looking at from the information before you decide to make a play on something, right? But again, I think you guys get the point. As always, if you guys have a question or a comment, leave it down in the comments below. I'll be happy to address it. Again, any like or subscription to the channel is 100% appreciated. Don't forget, you can always hit me up on Twitter and IG as well. As always, guys, I'll catch you in the next one.